1 minute ago, Dubai's skyline did something almost unthinkable. It dimmed. Not completely black, not a total shutdown, but enough to raise eyebrows across the world. In a city known for constant light, constant motion, and constant growth, even a flicker feels like a warning sign. But this isn't just about lights going out. It's about something deeper. Reports are coming in that occupancy rates across some of Dubai's most iconic towers have dropped to critical levels. Apartments sitting empty. Offices half used. Entire floors going dark at night. For years, Dubai has been the symbol of unstoppable expansion. Glass towers rising out of the desert, luxury living at every level, and investors pouring in from all over the world. So what changed? Tonight, we're breaking down what's really happening behind those darkened windows. Is this a temporary slowdown, or the first real crack in one of the world's most ambitious urban dreams? Because when a city like Dubai starts to dim, even slightly, people pay attention. And what we're seeing right now might be the early signal of something much bigger. Let's get into the numbers. In several key districts, occupancy rates have reportedly dipped far below what developers expected. Some buildings that once boasted near full capacity are now struggling to keep units filled at first glance. That might not sound alarming. Cities go through cycles all the time. But Dubai is different. This is a market built heavily on momentum. New towers don't just appear, they rely on constant demand to justify their existence. Right now, that demand is cooling. Short-term rentals aren't performing like they used to. Long-term tenants are becoming more selective. And in some cases, investors who bought multiple units are finding it harder to rent them out quickly. What makes this more noticeable is how visible it is. In a city where lights usually fill every window at night, gaps stand out. Entire sections of buildings look quiet. Still. Almost paused. It's not a collapse, at least not yet. But it is a shift. And when shifts happen in a place like Dubai, they tend to ripple fast. So what's driving this sudden drop in occupancy? It's not just one thing. It's a mix of pressures building at the same time. First, there's supply. Dubai has been building at an aggressive pace for years. New developments keep coming online, adding thousands of units to the market. At some point, supply starts to outpace demand. Second, global economic uncertainty is playing a role. Investors are being more cautious. Some are holding off on new purchases, while others are trying to offload properties they already own. Then there's the shift in how people live and work. Remote work changed housing patterns worldwide, and Dubai isn't immune. Some residents are choosing flexibility over long-term commitments, which affects occupancy stability. Finally, pricing. In some areas, rents and property prices rose quickly during recent booms. Now, the market is adjusting, and not everyone is willing to pay peak rates anymore. Put all of that together, and you get a slowdown that's hard to ignore. Not dramatic, not sudden, but steady enough to show up in the skyline itself. What makes this story so striking is how visible it is from the outside. Dubai's skyline has always been part of its identity. Bright, dense, alive at every hour. It's designed to impress, to signal energy and success. But now, in certain areas, you can literally see the difference. Fewer lights. Dark floors. Entire sections of towers that don't glow the way they used to. It's subtle, but once you notice it, it's hard to ignore. And that visual change matters. Because perception plays a huge role in real estate. When buildings look less occupied, it can influence how people feel about investing or moving in. It creates a feedback loop. Less activity leads to less confidence, and less confidence can slow demand even more. It's not just data on a chart. It's a physical signal, visible from miles away, that something in the system isn't moving quite as fast as before. So where does this go from here? There are a few possible paths. One is correction. Prices adjust, rents become more competitive, and occupancy stabilizes over time. That would be the healthiest outcome, and it's something Dubai has handled before. Another possibility is a longer cooling period. If supply keeps rising while demand stays cautious, vacancy levels could remain higher than expected for a while. That puts pressure on developers and investors alike. There's also the global angle. Dubai's market is deeply connected to international money. If global conditions tighten, that flow can slow down quickly. But it's important to keep perspective. Dubai has built its reputation on resilience and rapid adaptation. Policies can change fast. Incentives can be introduced. Markets can rebound just as quickly as they slow. Still, the current signs suggest a moment of pause. A rare one. Right now, Dubai isn't going dark. Not really. But it is dimming in places where it once shined without interruption. And that's what makes this moment interesting. It's not a crash. It's not a headline-grabbing collapse. It's quieter than that. More subtle. A few empty units here. A few dark windows there. But together, they tell a story. A story about growth reaching a limit, at least temporarily. About markets adjusting. About even the most ambitious cities needing to slow down and recalibrate. The question now is simple. Is this just a brief dip before the lights come back stronger than ever? Or is it the beginning of a deeper shift in how Dubai grows from here? We'll be watching closely. Because in a city built on light, even a little darkness says a lot. Across global markets, investors are starting to take a closer look at what's happening in Dubai. Not with panic, but with caution. For years, the city has been seen as a fast-moving opportunity. High returns, strong demand, and a steady stream of international buyers made it attractive. Now, the tone is shifting slightly. Some investors are holding back, waiting to see if prices soften further. Others are reassessing short-term rental strategies that once delivered strong returns but are now less predictable. There's also a noticeable change in behavior. Instead of buying multiple units at once, investors are becoming more selective. Location, pricing, and long-term value are getting more attention than before. The focus is moving from quick gains to sustainable returns. At the same time, some see this moment as an opportunity. Lower occupancy can mean better entry points for buyers willing to wait out the slowdown. It's a split reaction. Caution on one side, quiet optimism on the other. And that balance will play a big role in what happens next. On the ground, the shift feels different. It's not dramatic, but it's noticeable if you pay attention. Property agents are spending more time negotiating. Listings stay active longer than they used to. And landlords, who once had the upper hand, are becoming more flexible. In some buildings, amenities are still pristine, pools still full, gyms still open, but the energy feels slightly reduced. Fewer new move-ins. Less turnover. A quieter rhythm overall. Residents are also adjusting. Some are upgrading to better units at similar prices. Others are taking advantage of incentives like rent discounts or added perks just to sign a lease. For businesses operating inside these towers, the change matters too. Cafes, small shops, and service providers rely on foot traffic. When fewer units are occupied, that flow slows down. It's a subtle shift, but it spreads across daily life. Not a disruption, just a quieter version of what used to feel constant and full.